welcome to Sectors Up Close. I'm Elena Casas. Today we're talking tech and my guest is Satya Pradhuman, Director of Research at Cirrus. After the pandemic boom, fears have been growing of a tech bust. That's been most evident in a slowdown in hiring in Silicon Valley. Tesla and Netflix have laid off staff, while Meta, Google, Microsoft and Intel have all frozen hiring or rescinded job offers. Smaller startups have laid off thousands of people, while startup IPOs are 88% down on 2021, and investment in startups is down 23%. Smaller tech firms are suffering. This is the S&P 600 Small Caps Tech Index. It's down 21% year to date, compared to 14.8% for the wider Small Caps Index. So, are clouds gathering in Silicon Valley? Let's ask Satya Pradhuman, Director of Research at Cirrus. Satya, hi, thanks for joining us. Now, you pointed out in your research that tech IPOs have raised just over $300 million gross this year to date, and that's the lowest since 2008. So, where has all the money gone?
Yeah, I mean, what the technology sector is facing is a full-blown credit crunch. And I think that's exactly what's been engineered by the Fed. You're looking at, typically when we look at fast-growing companies, they're generally starved for capital. And if you do not have an easy capital marketplace, the slowdown should surface as it has. So some of this, I think, is expected. I think what's making this complicated is that we've already seen such a sharp pullback in these tech shares. Take some of the biggest tech names you've seen, they're down 30-40% for the year. Take the popular sort of ETF, the ARK funds, they're down over 50%. And so the question is, well, of course, we're almost there. It's time to buy again. And our point is, step back for a second. If the Fed is just going through quantitative tightening at this stage, and these are firms that genuinely need a lot of capital, and we're tightening the capital structure, then the bottom line is the sort of growth prospects for these companies are going to be very, very lacking.
Is this just about a lack of capital that's explained by the Fed tightening, Satya, or is there a wider lack of confidence in the market that demand is there for what these tech companies are offering?
Yeah, I mean, I think what's going on is it's really this challenge of where is the demand for growth? And if you've got this sort of inflationary backdrop and a buildup in spending on infrastructure thanks to energy, capital is being thrown into other more emergency needs. And that easy money is just not available right now. So this is not a goodbye to tech story. It's just that you've got to be really smart about what window you're looking at. And bear in mind, the venture capitalists in Silicon Valley, their full dashboard is really the same things we're looking at. They're looking at what are Tesla's multiples behaving like. And if those multiples are shrinking, they're not going to market, right? And they've got to mark down their books. So I think that's underway right now. We've got to let the dust settle a bit and then focus really on it. Our house view has been profit cycle slowing. Believe it or not, tech is also cyclical. You can't forget that. So the idea is that focus on earnings visibility, focus on really more compelling valuations, because as credit tightens, valuations matter.
So you think these valuations still have further to fall? How much worse could this get in Silicon Valley?
You know, you want to think probably the worst is behind. The problem is we don't have the insights to tell you this is the bottom. You're going to have a lot of people lose money trying to bottom fish or catch the bottom here. If we're telling you the fundamentals just don't look right, even though the stock prices have pulled back, it does say that you want to be much more selective. And yes, markets are reckless, so they oversell prices. And as a result, there will be opportunities. But broadly for the sector, if you're looking at buying a tech fund, I think we want to be a little bit more cautious right now.
How do you think investors should be approaching this space then?
Yeah, I mean, I think the idea of looking at a balanced portfolio matters. I think if you were very busy chasing, FANG stocks, take a pause. There's lots of very good companies with good balance sheets that may be outside the tech sector. So the overall portfolio should be healthy. And maybe we were a little too caught up with one sector.
Thanks so much for that insight, Satya Pradhuman, Director of Research at Cirrus. Well, that's our look at the tech sector. I'm Elena Casas, and this is Reuters.